Hey everyone, welcome back to Tesla Daily. Today is March 30th, 2026, and we've got a lot to cover. First up, let's talk about Tesla's expansion in Japan. It's an exciting move, and we can't wait to see how it unfolds. Then, we'll dive into some of Tesla's ambitious plans for the future. There's so much happening behind the scenes, and it's clear that the company is aiming high. We also need to discuss the new chip factory. This is a big step for Tesla, and it shows their commitment to innovation. Now, on a more serious note, we'll touch on the challenges Tesla is facing with their AI pivot. It's not all smooth sailing, but we believe they're on the right track. And let's not forget about Musk's legal battles. Things are getting a bit complicated, but we'll break it down for you. So stick around as we explore these updates and more. It's going to be a fascinating ride. In a bold move to strengthen its foothold in Japan, Tesla is set to double its number of service centers from 14 to over 30 this year. This expansion is a direct response to surging sales and the increasing demand for after-sales support in the world's third-largest automotive market. CEO Elon Musk emphasized the importance of this investment, stating, "Tesla is making a big investment in Japan with service and superchargers. Many of the parts in Teslas are made in Japan. Panasonic has been our biggest strategic supplier over the past 2 decades. The new service centers will primarily be located near Tesla dealers, allowing for quick and cost-effective expansion. In addition to these centers, Tesla is also enhancing its supercharger network, aiming to alleviate concerns about long-distance travel for electric vehicle owners. This strategic shift is crucial as Tesla seeks to capture a larger market share in a region traditionally dominated by local manufacturers. The partnership with Panasonic remains a cornerstone of Tesla's operations, as the company supplies essential battery cells for Tesla's vehicles, including the popular Model 3 and Model Y. The collaboration is expected to continue evolving, especially with Panasonic's plans to prioritize Tesla in their future battery production. While the Japanese market has been slow to adopt electric vehicles compared to other regions, Tesla's infrastructure growth is anticipated to facilitate a smoother transition for local drivers. By mirroring its successful North American model, Tesla aims to create a seamless ecosystem where maintenance and high-speed charging are as accessible as traditional gas stations. In summary, Tesla's commitment to expanding its service and charging infrastructure in Japan signals a significant strategic shift aimed at bolstering its market presence and addressing the needs of its growing customer base. As we look to the future, this investment could pave the way for increased EV adoption in Japan, potentially transforming the automotive landscape in the region. Now, let's shift to the next story. In a recent interview, California Governor Gavin Newsom did not hold back his criticism of Elon Musk, labeling him as one of the great disappointments in the electric vehicle EV sector. Newsom, who has been a longtime supporter of Tesla, expressed his dismay at what he perceives as Musk's retreat from innovation in the EV space. Elon was the one accelerating that. Now he's put the brakes on his own innovation in that space, Newsom stated, highlighting a shift in focus from electric vehicles to robotics and humanoid technology. This critique comes at a time when the global EV market is rapidly evolving, with China currently controlling approximately 70% of it. Newsom warned that the U.S. risks ceding its leadership. Here's the next update you should know. We are witnessing a concerning trend at Tesla as the company grapples with a significant leadership exodus, particularly affecting its highly anticipated Cybercab program. Mark Lupke, the manufacturing operations leader responsible for Cybercab assembly at Giga Texas, has recently announced his departure, marking the third senior figure to leave the program in just over a month. This follows the exits of Victor Nichita, the Cybercab's vehicle program manager, and Thomas Dimitrich, who directed the over-the-air update system and robotaxi infrastructure. Lutke's tenure at Tesla spanned nearly 8 years, where he played crucial roles in ramping production for models like the Model S, X, and 3. In his farewell message, he expressed gratitude for his time at Tesla, stating, "What seems? Here's the next update you should know." In a bold move, Elon Musk has unveiled the TeraFab project, aiming to revolutionize chip manufacturing with a staggering production capacity of 1 terawatt TW per year, 50 times the current global compute supply of around 20 gigawatts GW. This initiative is not just about chips. It's a strategic pivot that could reshape Tesla's role in the automotive and tech industries. The TeraFab project will establish advanced wafer fabrication facilities, initially targeting production for both Tesla and SpaceX. According to Dan Ives, a Wedbush securities analyst, this project lays the groundwork for a potential merger between Tesla and SpaceX by 2027, with shared facilities for producing next-generation silicon chips like AI5 and AI6. Ives notes, the physical overlap of infrastructure is the vital first step toward merging their vast operations. This ambitious plan comes amidst a backdrop of challenges, including a partial government shutdown that has affected TSA employees, which Musk attempted to address by offering to cover their salaries, an offer that was ultimately declined due to legal complications. This incident highlights the complexities Musk faces as he navigates both corporate and governmental landscapes. Despite the hurdles, the excitement surrounding the TeraFab project is palpable. The projected initial public offering, IPO, for SpaceX, targeting a valuation of $1.75 trillion and aiming to raise approximately $75 billion, is expected to be the largest IPO in history. This funding will be crucial for Musk's vision of integrating AI data centers into space, further solidifying his ambition to dominate the AI landscape. As we look ahead, the implications of these developments are profound. The merger of Tesla and SpaceX could create a powerhouse capable of leveraging terrestrial robotics and autonomous driving data alongside orbital AI compute infrastructure. While regulatory and antitrust challenges loom, the potential for innovation and market disruption is immense. In summary, as we stand on the brink of this transformative era, the TeraFab project not only signifies Tesla's commitment to advancing technology, but also positions the company as a formidable player in the future of AI and robotics. We remain optimistic about the long-term prospects, with Ives maintaining a $600 price target for Tesla stock, suggesting a potential upside of nearly 66% from current trading levels. Here's the next update you should know. Tesla has taken a monumental step in its journey towards self-sufficiency in semiconductor production with the announcement of the TeraFab project, aiming to produce an astonishing 1 terawatt, 1 TW of computing power annually. This initiative, spearheaded by Elon Musk, is designed to address the current chip shortages that have plagued the automotive and AI industries. Musk stated, "Either we build TeraFab or we won't have chips. We need chips, so we're building TeraFab." The TeraFab project is not just ambitious, it is unprecedented in scale. With an initial investment of approximately $20 billion, TeraFab plans to manufacture chips that will primarily serve Tesla's needs, including those for its upcoming humanoid robots and the anticipated robotaxi fleet. Currently, global AI chip production capacity stands at about 20 gigawatts per year, which Musk argues is merely 2% of what Tesla will require to meet its future demands. The factory will be developed in 3 phases, starting with a prototype expected to be operational by 2028, focusing on chips for Tesla's full self-driving FSD and AI systems. The second phase, from 2029 to 2032, aims to ramp up production to meet the projected demand for both ground and space computing power, with 80% of the output directed towards space applications. Key points of the TeraFab initiative include production capacity, targeting 1 TW of computing power annually, significantly exceeding current global capacities. Investment, an initial investment of $20 billion, with potential future investments reaching up to $5 trillion. Job creation. Tesla is actively recruiting for high-skilled positions in chip manufacturing, offering salaries up to $338,000 per year. Market impact. TeraFab is expected to produce 100 billion to 200 billion advanced AI and storage chips annually, addressing the critical shortage in the semiconductor market. While the challenges of entering the semiconductor industry are significant, including high capital requirements and technical expertise, Musk's vision for TeraFab could redefine Tesla's role in the tech landscape. As we look to the future, the success of TeraFab may not only bolster Tesla's manufacturing capabilities, but also position the company as a key player in the burgeoning AI market. The long-term outlook remains cautiously optimistic, contingent on overcoming the formidable barriers to entry in semiconductor production. Now, let's shift to the next story. As of March 30th, 2026, we find ourselves at a pivotal moment in Tesla's history, marked by significant challenges and transformative opportunities. The electric vehicle EV market is currently experiencing intense pricing pressure, which has led to a decline in Tesla's stock, closing at $355.28, down 1.81%. This decline is compounded by skepticism surrounding Tesla's ambitious shift towards artificial intelligence, AI, and autonomous robotics. In the wake of a brutal price war and a demand plateau in the EV sector, Tesla is attempting to reinvent itself as more than just an automotive manufacturer. The company has officially launched its Cybercab production line and rolled out full self-driving FSD version 14.3, signaling a strategic pivot towards recurring revenue streams associated with autonomous transport. Despite these efforts, the company has faced a challenging landscape. Year to date, Tesla's stock has dropped approximately 20%, with 6 consecutive weeks of losses. Investors are keenly awaiting the Q1 2026 delivery data, expected on April 2nd, which could provide insights into the company's performance amidst these pressures. On a more positive note, Tesla has reported a year-over-year increase in vehicle registrations in Europe for the first time since December 2024, selling 17,664 vehicles last month, a 12% increase from February 2024. However, this growth comes after a significant drop in sales due to factory shutdowns, and Tesla still trails behind BYD, which sold 17,954 vehicles in Europe during the same period. As we look ahead, the long-term outlook for Tesla hinges on its ability to successfully transition into a software and AI-centric business model while navigating fierce competition. CEO Elon Musk's vision for a fleet of self-driving robotaxis could be a game-changer, but it remains to be seen if this strategy will yield the desired results. In the words of Musk, the future of Tesla is not just cars, it's about creating a sustainable energy ecosystem. In summary, while we face immediate challenges, Tesla's pivot towards AI and autonomous technologies may hold the key to its future success, provided it can overcome current market pressures and competition. In a significant turn of events, Delaware Chancery Court Chancellor Kathleen McCormick has reassigned 3 lawsuits involving Elon Musk, following accusations of bias stemming from a social media post. Musk's legal team claimed that McCormick reacted positively to a LinkedIn post that criticized him, which could potentially influence the outcome of the cases. While McCormick denied any bias, stating, "The motion for recusal rests on a false premise that I support a LinkedIn post about Mr. Musk, which I do not in fact support," she acknowledged the media attention surrounding the issue was detrimental to justice and opted for reassignment. The reassigned cases include allegations that Musk improperly used Tesla resources to benefit his artificial intelligence company, xAI, and another case regarding insider trading related to Tesla stock. These lawsuits could have significant implications for Musk and Tesla, particularly as they deal with claims of excessive executive compensation and governance oversight failures. McCormick's decision to step aside reflects the intense scrutiny surrounding her involvement with Musk, especially given her previous rulings, including a controversial decision regarding Musk's $56 billion pay package. The reassignment of these cases to other judges aims to ensure a fair adjudication process free from perceived bias. As we navigate these developments, the long-term outlook for Tesla remains mixed. While the company continues to innovate in vehicle production and automation, these legal challenges could impact investor confidence and regulatory scrutiny. The ongoing litigation highlights the complexities of corporate governance in high-stakes environments, particularly for a figure as polarizing as Musk. As McCormick stated, "Fortunately, the Court of Chancery is far greater than any one person," suggesting that the judicial process will continue to uphold its integrity despite the controversies surrounding individual cases. Now, let's shift to the next story. The electric vehicle EV industry is on the brink of a significant crisis, with an estimated $8 billion depreciation time bomb set to detonate in 2028. Tesla, holding the largest share of outstanding leases, is poised to absorb the worst of this impact. Nearly 800,000 electric vehicle leases are set to expire that year, and each returning vehicle is projected to be worth about $10,000 less than previously anticipated. A recent study indicates that the Tesla Model 3 retains only 23% of its value after 6 years, highlighting the steep depreciation rates across the sector. This impending crisis raises questions about Tesla's strategy, particularly CEO Elon Musk's pivot towards robo-taxis and domestic robots, which some analysts view as a potential next up. Another key development. In a deeply disturbing case from the town of Turtle, Wisconsin, Thais Oninsky has been charged with the first-degree intentional homicide of her 14-year-old daughter, Curran Ryan. According to the criminal complaint, Oninsky allegedly killed her daughter to protect her from Elon Musk. This tragic incident occurred on March 19th, and the details are harrowing. Oninsky reportedly called the Rock County Sheriff's non-emergency line the following day, confessing to the murder and expressing her intent to take her own life shortly after. During the 13-minute call, she stated, "I murdered her to protect her from somebody else, period," later revealing that the individual she referred to was Elon Musk, the CEO of Tesla and SpaceX. When asked if she wanted, now let's shift to the next story. In recent developments, we find ourselves at the intersection of technology, politics, and corporate accountability, as Elon Musk faces significant scrutiny over his potential role in dismantling a federal business disclosure law. Democratic lawmakers, led by Senator Elizabeth Warren, are demanding answers from the U.S. Treasury Department regarding Musk's influence on the suspension of the Corporate Transparency Act, which mandates companies to disclose their ownership structures. This law was originally enacted to combat issues like money laundering and terrorism, but its enforcement was halted last year, coinciding with Musk's advisory role during the Trump administration. The lawmakers' concerns stem from a New York Times investigation revealing that Musk operates at least 90 private companies in Texas, utilizing limited liability structures. Well, that wraps up our update for today. Thank you for tuning in to Tesla Daily Insights. We appreciate your support and enthusiasm. I'm looking forward to sharing more news with you in our next update. Until then, take care.